Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we are navigating digital finance together. I'm your host, Zenith, and I'm joined by my excellent companion here, Mr. Agent J. We're back for a Jay-Z show, if you will. You know, buddy.
Yes, sir, we are. Yes, sir, we are. How you doing, man? I'm doing fantastic. It was a great weekend. Did a little bit of celebration yesterday with the wife because her and her folks are down combined, I think 100 pounds. So that was super cool. And then she and her dad, to celebrate also, they went to go get tattoos. It was kind of like a father and daughter day.
Nice.
He got the U.S. Air Force brand on his shoulder because he's former U.S. Air Force and U.S. military or Army. And then my wife got they made a handprint of my father-in-law Kevin's I think it was his left or right hand, and then that's what they tattooed onto her left shoulder, and then she's gonna get a matching one of her mom's on her right shoulder. So I thought that was as far as tattoos goes, I was like, those are nice and they're tasteful. So they had a father-daughter day, and it was pretty cool. So
It's pretty cool.
Yeah. How about you, brother?
I'm doing pretty well. Busy weekend as always, because this is actually the last time I'm going to be streaming from the current setup. I am doing the good old move.
Still within the same state, or are you moving out of state?
Yeah, I'm moving literally like 1 mile away. Just lease ended on this place, so found a new one. Should be good. But yeah, I mean, you're going to get the same background wherever I go, pretty much. So outside of that, though, yeah, there's a lot of boxes. I have disassembled my couch, my TV stuff. So yeah, we are in the process of getting ready to skedaddle. But it's, you know how it goes: packing, repacking, throwing out a lot of junk that we don't need anymore, that kind of stuff. Yeah. Alrighty. Well, good sir. Let's see what we're talking about tonight. We're talking about the U.S. credit score getting downgraded. Talking about central banks flirting with some blockchain tools, specifically some very big banks, I will say. Then lastly, we had an article come out hyping up Sonic a little bit. I don't think we've talked Sonic too much on this channel, but I think that a lot of us here think that the project has some good bones to it. And I think there's also a very good case to be made, very good argument to be made about the price action and the price history of it, and that there's a decent chance you're going to go on a pretty good run here coming up the rest of the year if everything goes well. Additionally, I did have a fun little article I wanted to open with, just as a shout out to, I don't know if we talked about Warren Buffett on this one or DGen Roundtable, but our boy has exited all of his crypto holdings. So he was in it. Now he's out.
Yeah, we spoke about this briefly during his, what was it? You call it his swan song when he announced that he was going to retire. And we explored his investment portfolio, and he hasn't bought crypto directly, but he was involved in this particular company, so crypto adjacent. And I mean, 250 mil, it's changed to Warren Buffett, but a man true to his word. He's like, I don't want to have anything to do with crypto. I might as well exit while I'm up.
Hey, he's securing the gains. If we go down here, yeah, what they're talking about is exited the position. The decision to divest didn't appear to be performance-based. New holdings posted record profits in 2024 and Q1 of 2025. Buffett's exit aligns with their broader financial sector pullout and growing of their cash reserve strategy. At the same time, though, $250 million profit. Well done, sir. Well done.
Well done.
Oh my gosh. Wild stuff. So yeah, I know we talked about it previously. Said that, was it Warren Buffett said that, what was the quote? It was like, crypto is more poisonous than like rat poison or something.
He said, and I quote, rat poison squared.
Oh, that's what it was.
Oh my God. Only something that somebody north of 70 years old will probably ever say.
Yeah, I will. He said that like 10 years ago, if I remember the timeline correctly.
Yeah. Rat poison squared. Wow.
Wild stuff, man. Wild stuff. But before we get into the actual show proper here, we do have some folks out in the audience I would like to say hello to. We got our boy 54 Cent, aka Centurion 54X. He says, "What's up, guys? Good to see you, sir. Happy Monday to you." And a happy Monday to Wonder Wolf as well. We got a Ninja Watcher here. Ninja no more. You left a trace there, buddy. Mm-hmm. And then last but not least, we got Luna C Point saying, hey, gang, with the heart. Happy Monday to you, Luna. Hope you're doing very, very well. All right. That being said, let's get after it. Big news of the day right here. The U.S. loses its perfect credit rating amid a rising debt. So this is coming to us from the BBC. A lot of the U.S. news, trying to find a good source for this article was a little tough. Everything was rather biased, shall we say. But here we go. So the U.S. has lost its perfect credit rating as influential ratings firm Moody's expressed concern over the government's ability to pay back its debt. In lowering the U.S. from a AAA rating to a AA plus rating, Moody's noted that the successive U.S. administrations had failed to reserve ballooning deficits and interest costs. The AAA rating signifies a country's highest possible credit reliability, and it indicates to be considered in very good financial health with strong capacity to repay its debts. So Moody's warned in 2023 that the AAA rating was at risk. They downgraded the U.S. in Fitch downgraded in 2023. S&P Global Ratings did so in 2011, but Moody's has held a perfect credit rating score since 1917. So at a glance, this is the first time for Moody's to downgrade the U.S., but it's not like this has not happened in the past. Back in 2011 and 2023, you might remember that in 2011, we may have been recovering from something called the 2008 financial crash. Outside of that, though, yeah, it's a bit of a stain. Although I will say, I think that the rest of the article does a little bit of a given both sides of the argument here. In a statement, the White House said it was focused on fixing Biden's mess while taking a swipe at Moody's. If Moody's had any credibility, they would not have stayed silent as the fiscal disaster of the past 4 years unfolded. A lower credit rating means countries are more likely to default on their sovereign debt and generally face higher borrowing costs. Moody's maintained that the U.S. retains exceptional credit strength, such as size, resilience, and dynamism, and continued role of the U.S. dollar as the global reserve currency. The firm has said it expects the debt to increase to 134% of GDP by 2035, up from 98% last year. GDP is the measure of everything in the country. They have asked for comment, but they have gotten nothing. Latest stuff coming out of the U.S. stuff right now is that Trump's landmark spending bill has suffered a small setback in Congress. The big, beautiful bill failed to pass the House Budget Committee, with some Republicans voting against it. They do mention here that they show the U.S. economy shrank in the first 3 months of the year as government spending fell and imports surged for goods into the country ahead of tariffs. So we have a couple things here. Number one.
Yeah, let's take it step by step. There was a lot of things said there, and a lot of things we're gonna have a discussion about.
True. All right, we're going from AAA to AA plus. Does it matter?
In the grand scheme of things, I don't think it does, but I actually do not disagree. There's one part in there talking about if they had any credibility, that they would have done it earlier. I think this is just Moody's extending them the benefit of the doubt. The fact that it happened during the Trump administration is probably just pure coincidence. I don't think that there's a partisan role here in terms of like on the side of Moody's. If I was a creditor, I would have downgraded the U.S. rating a long time ago. I was talking about this a little bit earlier on our member section during the morning stream. If you were a creditor, let's just say in a small microcosm example, if you were a bank and somebody came to you for a loan, and you look at their financial history, and in their financial history, they are knee deep in debt. They keep accumulating more debt. They can barely keep up with the interest payments on their debt, if at all. And you notice that they have applied for loans, not just from your bank, but from multiple banks. So they have outstanding loans across multiple institutions. And now they're coming to you asking for another loan. If you looked at that individual, you would say probably that they don't have very good credit worthiness. And that's the United States. The United States has just let's say, printed over half of the current circulating supply of US dollars within the past 4 years. They keep increasing the debt ceiling. Nobody says no to the deficit spending, whether you're on the left or on the right, and they can barely keep up with the interest payments on their multi-trillion-dollar debt. Yeah, the United States is not very credit worthy. So the fact that you only got downgraded from AAA to AA, was it AA?
Double A plus.
Double A plus. That's them being very graceful. Okay.
I think I'm in complete agreement with everything you just said. Number one, is this a knock on the Trump administration? No, I just think it's largely coincidence that it's gotten to this point. I am also very much in agreement with you that this rating ding probably could happen like almost over 2 decades ago.
Yes.
This is the country at large has been on the same trajectory for a long time. We've had ups, we've had downs, we've had periods where we've been borrowing more, but at the same point, we've never really had any period, especially in the 21st century, where we've really been paying back the debt or even looking to slow spending. It's only been going up an exponential curve and only getting higher and higher. But to your example, exactly, this is a person who has credit card payments and is just keep opening up more credit cards. And you got to ask the question, like, do we keep giving money to this person? And the one saving grace, or I guess there's two really. Number one would be that the U.S. is the largest economy in the world, hands down. Number two is that the U.S. dollar is still the global reserve currency. So because of those two factors, I would argue that it's kind of a different scenario, which is like, yes, it's cool that you want to actually like try to do credit ratings and try to keep it somewhat scholarly or honest, you might say. But at the same time, it's very, very different from any credit rating that like you or I are going to get for our own personal credit score to like go get a house or a car or whatever. The US it's in a different league. It really is. Yeah. There's levels to this, and this is operating at the highest level. So I again ask the question, does it matter? And to me, the answer is actually no. It really doesn't matter. Yeah. It just seems like, if anything, it's a little bit more ammunition in our magazine, so to speak, for people like you and me who are saying that, like, look, the debt is getting untenable. It's been untenable. You got to do something and course correct. Otherwise, this is going to cause serious ramifications down the line. It's one more point for that kind of argument. But outside of that, is it going to change the day-to-day? Not really. It might make the business environment a little more unstable, but at the same time, this is not issue number one. So I guess my message to the folks is, if you see people fear-mongering about this, don't sweat it too much. It's not going to affect your day-to-day lives, and it's barely going to affect the markets, I think.
Yeah. I think you are absolutely correct. I think if the U.S. came to somebody and asked for the loan, I think they'd still get the loan the same way that even people with terrible credit still get loans. You're just going to have to pay a premium. You're going to have to pay a higher cost of capital when you take out that loan, right? You're going to get probably a higher interest rate if anybody has the balls to say to the U.S., "Hey, man, you just got docked a point from Moody's. Now we're going to charge you a higher rate." It might affect the U.S. in that sense, but you're correct. I think in totality, I think it's just I don't want to say that it's for show, but a lot of it's probably just for show.
I will say the reason I find this article and this topic interesting is because there's a question around something you just asked, which is that, okay, the U.S. now has a lower credit score. So theoretically, someone could be charging more for the debt. The question is, who sets the interest rates on that debt?
Mm-hmm. Exactly.
Oh, would it happen to be the Federal Reserve? Would it happen to be us anyways?
We set the interest rate on the debt anyway because everybody else follows suit. There was one thing that you said that I just thought so was so hilarious, because you were like, "Yeah, our debt is untenable." You know who disagrees with you? Jerome Powell. They asked him about the debt last FOMC, and he was like, "I don't think the debt is unreasonable. I think the path of the United States debt is unsustainable." And I just had to I'm like, bro, are you serious? The
He's
debt is reasonable.
as hard as he can.
I could not believe that. Yeah, I could not believe he said that with a straight face, bro. Like, the debt is not reasonable. What are you talking about, dude?
Look, when you get to DC, I guess you drink the Kool-Aid, man, because clearly they think they can keep this circus going forever. But I happen to believe that in my lifetime, something's going to happen on a large scale when it comes to monetary policy and the global reserve currency. I hope and I pray that it's going to stay inside of the United States, or at least get shifted over to something like Bitcoin. Like, that would be amazing. But at the same time, though, I do think I'm not calling like next 5 years are going to be a financial crisis. Everyone sell your house, buy all your gold, stack bullets, and like go live. No. I think that in my lifetime, the issue will get pressed and we'll have some sort of resolution. Might not be a happy one, but that's my prediction. That's me reading the crystal ball, so to speak. Oh, gosh. Interesting times that we live in, good sir. Yeah. Outside of that, though, I do think it was interesting that they mentioned a few the last like 2 points that they mentioned in the article. Number one, the spending bill going through Congress obviously has some holdups. The way that this is going to happen, I'm just going to call it now, which is this is going to be the new omnibus bill. It happens every year when it comes to spending, which is that it's easier for a politician to vote on the giant turd sandwich and be like, hey, if you wanted all that good stuff, it was in there, so I had to vote for it. Granted, there's some stuff I didn't want, but I had to vote for it. It gives plausible deniability, and there's kind of like a weird prisoner's dilemma in politics, which is like the less actions you can take, the less accountable you can be to your constituents, so the less you have to answer for when you try to go get reelected. I disagree with the way that the incentive system is set up, but that's just the way that it is on the ground. So I fully expect this thing to pass at some point in the near future. It's by the numbers. That's just how it looks. And then the final note that they had there was that the U.S. economy shrank for the first time in 3 months. They also mentioned, just kind of like at the end there, it's because people are trying to get goods into the country ahead of tariffs. It's like, yes, that was the driving factor. The tariff scare was the driving factor for that. So to me, like both of those are kind of just like non-points. You can try to read into a little bit, but I think largely it's just kind of like business as usual. Or in the case of the tariffs, it's what Trump said he was going to do. So what'd you expect?
Exactly. You get what you voted for. And that's coming from somebody who likes Donald Trump and who voted for Donald Trump. So
no one is surprised. Yeah, the man said he was going to do it.
I was completely aware of the volatility that came with voting for Donald Trump, but on balance, I think we're better off with him at the top of the Oval Office than certainly better than Kamala Harris. Certainly.
I'll put it this way. Had Kamala won the election and she's in office right now, this still would have happened. Arguably, it might have even happened sooner because she might have just been more of a spender than Donald Trump. Although the dirty little secret is that Donald Trump is also a big spender, just like to a slightly smaller degree. Mm-hmm. So
both sides like to spend, man. But you're correct. The bill is going to get passed. It'll just come in the form of a turd sandwich where you're not going to be able to avoid all the fat that's added. It always happens every single time because everybody has to get a little bit of what they want in there. So.
Yep. If anything, I'm just hoping that someone puts the Federal Hearing Protection Act in there so we can get those suppressors off the NFA list. I'm just saying, let's just make like a one sentence, sneak it in the giant stack. The whole point is that nobody reads the whole thing. So like, come on, make a play. All right. All right. Enough wish casting from me. Let's move on to article number 2 of the evening. Coming to us from Cointelegraph, central banks testing a smart contract toolkit under BIS Project Pine. So, for those who don't recognize that acronym, this is the New York Fed and the Bank of International Settlements are trialing smart contracts for tokenized monetary policy, aiming at letting central banks act instantly in future financial systems. According to a joint research study by the Federal Reserve Bank of New York Innovation Center, the Bank of International Settlements Innovation Hub as well, smart contracts could offer central banks flexible, rapid response tools and tokenized financial systems. The study, dubbed Project Pine, this one right here, tested a prototype generic customizable monetary policy tokenized toolkit. Wow, that was a word sandwich. Testing it for future research by central banks. Smart contract toolkit was fast and flexible. In hypothetical scenarios, the central bank was able to add and change the tools instantly. Here's the one of the interesting things for me. Where to go? Project Pine employed Ethereum's ERC20 token standard combined with another standard for their access control. Financial institutions have increasingly embraced tokenization in the recent years, and at the 2025 consensus, Joseph Spiro, product director at DTCC Digital Assets, called stablecoins the perfect financial instrument for real-time collateral management for financial transactions such as loans or derivatives. So I know this might just seem kind of just like a headline of an article, which, by the way, it pretty much is, but there's interesting little nuggets in there. So these are big players. We have the New York Fed and the Bank for International Settlements that, handles settlements between countries, nation states, people with their own currencies, that kind of thing. And they're actually using ERC20 Ethereum technology, and they're interested in stable coins. If you lump all of that together, what you see is that traditional finance is actually realizing, and like government as well, is realizing that, oh, wait, having the ability to do banking outside of 9 to 5, Monday to Friday is really good. And there's already this technology called Ethereum or blockchain, and we can take it, tweak it, make it our own, and it works just fine and very, very quick.
We got a question from Matthew here in regards to this particular article. He's asking, what are they using? So in this particular so we can speculate that if they're using the ERC20 standard, that they're probably using Ethereum and Ethereum-based stablecoins. It might be USDC, it might be Tether, who knows? And in relation to XDC or XRP, it might be a bummer for XRP investors, but probably not so much of a bummer for Circle or for Tether or for Ethereum. But
agreed.
XRP will do fine. The Ripple will get its pound of flesh. I mean, Ripple's making a bid to buy USDC, so who knows? It might not matter in the end if they sell to Ripple and not Brian Armstrong, or maybe they just don't sell at all. Who knows?
I've heard about that potential idea of buying USDC, but at the same time, Circle, I think, enjoys the monopoly that they have right now. And I think the running joke there for a while was that if you want USDC to be available on your chain, you have to pay your extortion fee of $200 million to them, and they'll begrudgingly put it on your chain for you.
Mm-hmm. Yeah. So if I was
good
Circle,
luck buying that racket. That is a solid racket.
Like you're gonna have to rack up that bid. If I'm Circle, and that offer better be something that I can't refuse, man.
I want to see this real quick. What's the stablecoin dominance at these days? I want to say USDC is still well in the lead.
Stablecoin dominance? No, it's Tether.
Tether, really?
Yeah, Tether by leaps and bounds.
Where have I been? What the heck?
Yeah.
All right, here we go. Coming to us from TradingView. We have stablecoin dominance. So we have different colors here. Green is Tether, blue USDC, yellow is Binance USD, and purple here is DAI. Oh, you can see Tether lost a good chunk of its market share throughout 2022, but it has really recovered. Wow, look at that. And then USDC has been coming up, and ever since, again, mid-2022, that July timeframe, been dropping off. DAI has been staying relatively stable. I think the what is it, algorithmically a stable coin or something?
Yeah. DAI is like that. DAI is the quote unquote the DeFi user stable coin of choice. But I mean, most people that we know, even crypto native people, are either using USDC or they're using Tether. So this is about par for the course. It's not surprising to me. Tether, with the amount of with the amount of partnerships that they're doing worldwide, with the amount of U.S. Treasuries that they're accumulating, that's not surprising to me. So you're gonna have to do a lot of work to catch up to Tether, man, because Tether has their roots in a lot of different soils, and they're also hyper efficient. They've got 40 employees. They're a multi-trillion-dollar company. Yeah, man.
Yeah,
they ain't going anywhere.
I was looking at the Binance USD stablecoin there. I was hoping to find a funny correlation with when CZ got sentenced, but unfortunately, it's about a year too early for the drop off there. I thought that would have been hilarious, but can't win them all. Alrighty. Anyways, back to the story. So, do we think this is important, and why? I think yes. I think this is another indicator that the larger forces at play in the world are actually starting to take this stuff more seriously and are actually enjoying some of those benefits. I think that having international scale smart contracts for the Bank of International Settlements, I think is huge. It's literally the world government network, and it's the world currency and markets working together on blockchain. Something like this could be a massive leap forward for blockchain adoption and technology. At the same time, though, I think we are going to start seeing, if they start moving this direction, though, I'm just going to say it now. I imagine there's going to be more and more crypto hacks and more people trying to hack Ethereum and those ERC20 contracts, because you just put a gold mine in there. If you can break in there and get some, you're going to be a very, very wealthy man. So I think that there might be some security stuff in the future, but at the same time, though, I hope they really step up the security game and try to ensure that their new standard that they're adding on top of the ERC20 standard is actually worth its salt and can be secure.
Yeah, man. I think as this technology evolves and as more people adopt it, and it truly becomes a worldwide phenomena, the criminals trying to exploit it are also going to evolve. We've seen this over the last few years. Look at what's happened to some of our favorite cold storage devices, Ledger in particular. They have not been immune to these particular hacks, to the social engineering. Look what happened with Coinbase recently, with the personal information data leak. Criminals are going to get more sophisticated. They're going to learn how to abuse the loopholes, the weak points in the system, and it's just an inevitability. And to be quite honest with you, the best thing that you can do is to be hyper vigilant in your own personal security. So, will the amount of scams and hack attempts increase? Absolutely. But that's part and parcel of a technology that's going to be widely adopted.
It's true. I mean, it's kind of like the age-old thing. As long as people had something of value, people have been trying to steal it. So,
yep.
Security makes sense.
Yep, precisely.
Outside of that, though, I'm happy to see this stuff getting pushed forward. And instead of just doubling down on old traditional finance systems, them kind of waking up and thinking that they can do it better and faster and cheaper and easier. Yeah, I think that the march towards the future it's always present, and it's pushing these folks forward. I know the banking system has largely been stuck in its ways for millennia at this point, but I think this could be a real game changer in the future. Have to see more on it. This is still very early, like prototype level stuff. Still largely untested, but the preliminary report does appear to be promising, in my opinion. Speaking of Coinbase, though, oh, sorry, go for it.
It's not isolated to the BIS. We know that JP Morgan has their own private blockchain, the Onyx blockchain. So it won't be the last. I can tell you that much.
True. Alrighty. Speaking of Coinbase, transition this time actually. Coinbase has been hit with a wave of lawsuits over their customer data breaches. Yes, for those who have not been aware, Coinbase has more than likely leaked your information to the web. So, congratulations. I'm included in that, unfortunately, but it is what it is. Coinbase has been hit with at least 6 lawsuits over the crypto exchange's recent disclosure that some of its support agents were bribed to leak user data. In one of the lawsuits filed in a New York federal court on May 16th, plaintiff Paul Bender argued that Coinbase failed to protect the sensitive personal information of millions of users during the data breach. Item 21. Due to Coinbase's flawed security measures and Coinbase's incompetent response to the data breach, plaintiffs and class members now face a present, substantial, and imminent risk of fraud and identity theft and must deal with that threat forever. Item 22. Despite widespread knowledge of the dangers of identity theft and fraud associated with cyber attacks, Coinbase's large operating budget, gosh, where's the verb in that sentence? Oh my gosh. On to the next one anyways. 23. Coinbase failed to adequately adopt and train its employees on even the most basic of information security protocols, including storing, locking, encrypting, and limiting access to its current and former consumers and employees' highly sensitive PII, personally identifiable information. That's what that one is. So here you go. 4 days earlier, it had been hit with a $20 million extortion attempt by cyber criminals. And they had claimed that it bribed several other customer support agents to access that internal information and steal it. The stolen data includes names, addresses, phone numbers, emails, and the last 4 digits of social security numbers, some bank identifiers, driver's licenses, passports, some account data, such as balance snapshots and transaction history. So I'll be honest, I think 2 of those don't matter at all, namely balance snapshots and transaction history, because if you're operating on crypto, you should probably expect for that stuff to be public anyways, because it's blockchain. But the rest of it, namely, I think these 3, bank identifiers, driver's licenses, and passports. That's some serious stuff right there.
Hey, Coinbase, welcome to the club, man. You know who else got hacked recently? Apple.
Oh, great.
And their cloud. So
yeah, they definitely don't have a lot of very sensitive items on the cloud, do they?
Yeah, if you if you run your business on the internet, you are going to be like, you have an increased attack surface. Coinbase is not a small company. They're gonna, like, some bad eggs are gonna pass through. Whether this was a data breach because some employees were bribed, I don't know. I don't know if that's just clickbaity or whatnot, but it's unfortunate that it happened. And they should take as many steps as they possibly can to make sure that it doesn't happen again. Will people keep attempting to do it? Yeah, absolutely. I like Armstrong's response to the hackers, though. He's like, go kick rocks. I'm not paying your ransom. We don't negotiate with terrorists. You know who I am going to pay? I'm going to pay all of the white hat hackers who would like to come forward and help us catch these bastards. So what a Chad response from Brian Armstrong.
Well done. That's how you do it. Honestly, don't negotiate with terrorists, and you threaten them right back, and you go pay people to do their job good and go get them.
Yep. Like, go kick rocks, go pound sand, go punch the air, go piss up a rope. I'm not paying your ransom. I'm going to pay the white hat hackers to come and get you guys. So good on him.
Oh boy. Hey, there you go. Fight fire with fire. That's how you do it. Excellent stuff. Overall, though, I do think that this article is just an excellent periodic reminder that, look, central exchanges, do they give you a little bit of ease of access, a little bit easier time moving stuff around? Yes. At the same time, though, this is one of the core risks with centralized exchanges. Outside of them just failing just failing on their own, the ability to trust someone else for your cryptocurrency is fundamentally against the concepts of DeFi, which is not your coins, not your crypto. Not your keys, not your crypto. If you don't have access to your private keys, you don't own that asset. What you have is someone else with a ledger who says they owe you certain things, and at some point in the future, they'll probably give you the keys that you asked for, but nothing is even guaranteed. And again, crypto is not insured by like the FDIC or anything like that. So if you're in this world, it kind of does make a little bit of sense to take as much of that control as possible so that you can be in control of it and understand and know what your security protocols look like. I'm a big fan. At the same time, though, I will say centralized exchanges absolutely do have a place right now, which is that they are the easiest way to onboard fiat currency, aka US dollars, into cryptocurrency. That's unfortunately the kind of the bottleneck that we got to go through. Also, at the same time, I will admit they are pretty nice to place limit orders on, and they do have some pretty good portfolio tracking tools, and they'll give you a nice tax printout. Which, look, those are all positives, but at the same time, though, security is key. It should be number one. Gains, you might think gains are number one, but if you can't secure your gains, what's the point? Security number one, good investment number two. By the way, Jay, we have a bit of a straggler coming in here. Tracker, what's going on, buddy? Tracker, you were just in time for your favorite topic. We were talking about how centralized exchanges are prone to fail.
Hey guys, can you guys hear me okay, or am I bad?
A little bit far away.
How about now? Is that any better?
Same.
Sorry, guys.
All good.
All right. Yeah.
I believe that you were better.
Is that better?
Much better.
All right. Sorry, guys. Being very unprofessional.
No worries, brother.
Sorry, what are we talking about? Yeah.
Coinbase is now getting sued for the data breach that they had recently. Jay mentioned that Brian Armstrong pretty much told the hackers who were trying to hold him at ransom to go kick rocks. And yeah, centralized exchanges are just doing what they do.
Yeah. You know who else got sued today?
Who got sued?
Michael Saylor.
For what?
Get out of here.
Oh my goodness. Hold up. Tracker, go ahead and respond, and I'm gonna show you guys what exactly Michael got sued for.
Yeah, sure. I just feel like it's very interesting how so much has happened with Coinbase in this short period of time. They just got listed for the S&P 500. They just get hacked, and right, Coinbase got hacked, what you just said, right?
Yep.
And then on top of that, and there's also rumors that they're trying to sell. So that's a lot of things that just happened in, like, I don't know, 5 days. I mean, I'm not saying anything's connected. I'm just saying that's a lot of activity for a company to have in 5 days.
That is a lot of activity. I will say, I think Coinbase has kind of been the protagonist of the centralized exchanges for probably like the last year or two at this point.
They got so much power, and a lot of people want that power. So there's going to be a tug of war going on here, I think, with a lot of that. Jay, sorry, you had something to say?
Small correction. Coinbase is not trying to sell. They're trying rip up. Circle is trying to
Circle.
Circle is in talks with either Coinbase or Ripple to sell to either one of those. Whether they're considering it, I don't know. All I know is the rumor right now is they're in discussions. The Coinbase thing was new, but Ripple making a bid for Circle has been in for a few months. Yeah.
Right. I just feel like it's there's so much activity going on now, and honestly, we talked about it. Once the regulation opened up with specifically the FDIC and banks could hold crypto, it's like now everyone's just rushing to see who's first out the gate, and they're going to try to latch on to the players that have already gotten ahead. So it's interesting to see that. As far as Coinbase, you bring it up, Jay. What you wanted to bring up about Michael Saylor on getting sued?
Yep, I got it.
Just saying, I think what I'm going with this is, certain players have a lot of power in this space. They've already made it very clear because of the massive switch that this is changing the entire landscape across everything. I mean, the fact that it came out today, somebody posted, I thought it was interesting that they were talking about by 2030, what did they say? Some staggering number of the base of the stable coins we're going to own the most U.S. treasuries, most likely. Now, keep in mind that's theory based on how they're boiling up. But what I'm saying is,
Tether is like number 6 right now, I think.
Right. I'm just saying though, think how new everything still is. It is so new, and yet it's disrupting the entire landscape of the financial industry across the board dramatically. And then of course I saw the big data thing that came out about a week ago with BIS showing about, ridiculous amounts of money transacting cross borders. And they were like, oh, we got a problem here. We're going to have to step in for the safety for everybody. Right. It's moving so quick that the regulations and the government can't even keep up with what's going on. So it truly is a race for power right now. The ones who have power want to keep it, and the ones that are starting to get it want to try to take it away. So you're seeing a massive power struggle going on around the world that most people have no clue that any of this is happening. It is a hell of a theater right now is what I'm getting at. Sorry, Jay, go ahead.
Yeah, I'm total in agreement. I have here pulled up the big news over crypto Twitter today. All the hubbub right after he bought a whole bunch of Bitcoin. We got this news today that apparently Michael Saylor and Strategy, they have a class action lawsuit being brought forward against them. So the details, this was filed May 16th, so just a few days ago. A class action lawsuit was filed by Anas Hamza on behalf of shareholders alleging Strategy misrepresented risks tied to its Bitcoin investment strategy. As a class action, others can join the suit. Key individuals named: Michael Saylor, Chairman; Fong Li, CEO; Andrew Kang, CFO. The case cites securities laws provisions. And here was Strategy's response. The company strongly refutes the claims, asserting transparency and compliance at every step. They plan to defend themselves rigorously. Now, do I think this damn class action lawsuit has any merit? I don't know. We'll leave that. We'll leave the deliberations for the judge who is going to be presiding over this case. However, on surface, I think Michael Saylor has been extremely transparent about the risks associated with Bitcoin. I mean, the man talks about on a per interview basis just exactly how much more volatile Bitcoin is as an asset class and how much more volatile MicroStrategy can be as an asset. And that's precisely what is attractive about it. So if you are a shareholder, if you are an investor in MicroStrategy, and for some odd reason it didn't go through your head that investing in a company that leverages itself out of the ears to buy the high risk asset in all of mankind, and you didn't think that that was going to be high risk, and for some reason you believe that Michael Saylor tried to pull the wool over your heads, that he was not, like, he was obfuscating how risky it was to invest in this particular asset class, you are a fool. You are a fool.
That is about as clear of writing on the walls as you can get, which is Michael Saylor's. I would argue that Michael Saylor might be, I'll give him definitely top 1,000 most public people in the world right now. I might even give him top 100, honestly. Like, he is someone that tries to do media as much as possible, long form, short form, public appearances, whatever you want to talk about. He is a guy that is very much in the open, and everything he talks about is this right here.
Yeah.
Which, by the way, I do have for you. So you mentioned the magic words. Section 10B of the Securities Act. Well, what is Section 10B? Well, pretty much Section 10B makes it unlawful to use or employ, in connection with the purchase or sale of any security, a manipulative or deceptive device or contrivance in convention of such rules and regulations as the SEC may prescribe. Again, security is broadly defined to include, amongst other things, stocks, bonds, debentures, that kind of stuff, or in general, any instruments commonly known as security. So what you're going for here on this one is that you're trying to deceive or defraud investors.
Oh my goodness.
Is your CEO going on podcasts and news hits and public appearances for literal years talking about the strategy? Do you think that's an attempt to defraud or deceive?
Dude, it is so silly. If you think in this landscape, in this SEC, you're going to have a chance of this thing going to trial against Michael Saylor, you are a fool. The man has literally said, do you know what we love about Bitcoin? Do you know what shareholders love about MicroStrategy? Is because we don't try to take the volatility out of the asset. The volatility is part and parcel of the asset. It's why we like it.
True.
This lady here.
It's a money grab. It's a money grab, man. It's just a money grab, basically, is what it is. Michael Saylor has
blatantly so.
Not only has he given, he rolled major dice on all this. Because here's what could have happened. Bitcoin could have just no reason at all. It could end up being, yes, it could still go on to be this amazing thing, long-term revolutionizing the entire world, liquid, digital gold, the whole nine, change everything. But it still could have had an oh crap moment where it just tanked, and he could have lost his entire job, career, everything. And he was still pushing, going all in at the table, and just doubling down, tripling down, quadrupling down. Like, he put his entire career, everything. He would have been the biggest clown ever. He'd go down, there'd be memes made of him, how bad it would have been. Like, it really was. He put himself out there. But I'm looking at this now on this person who's saying this Hamas is bringing this case on behalf of other shareholders who may have experienced damage due to MicroStrategy's disclosures or omissions regarding its Bitcoin holdings and corporate strategy. Hamas is based in Dubai and has connections to the crypto industry. He has filed a lawsuit to U.S. District Court in Eastern District of Virginia. I don't see him winning in Virginia, but anyhow, that's a very conservative state, claiming that MicroStrategy had to recognize a roughly $5.9 billion unrealized losses on its Bitcoin and other crypto assets for the first quarter of 2025. Just how much as an individual, the professional presence on LinkedIn, yada, 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 going on genetic. All right. So it's a cash grab. That's it.
Very clearly. It sounds like they're really trying to hang their hat on the idea that they had one bad quarter of Bitcoin performance. Oh,
yeah. I'm sorry, but is a cash grab. But it goes back to what we're saying. You have a few major players, and right now putting your name out there and your face out there in this world, you got a big target on your back. That's the biggest takeaway that I see a lot of this stuff. The bigger you are, the bigger the target's on your back, and they know you're sitting on a ton of money of what you're doing because you've been so aggressive with your takes. So
yeah,
it's keep your identity at check. I mean, and look at who was the gentleman who had to come to the. Luckily, they're going to pardon him, but it seems like any big major early players were just scrutinized, and it's just a cash grab. Whether it's a government coming after you, an individual coming after you, or another competitor to try to buy you out or just overtake you, a hostile takeover. I mean, it's just they're coming all different directions at everybody. So I guess it's more money, more problems.
yeah, man.
Exactly.
It's I personally think it's not going to go anywhere. When MicroStrategy was still MicroStrategy, and Michael Saylor announced that he was going to go all in Bitcoin, he offered all of his shareholders the opportunity for him to buy back their stock, because we're going to go all in Bitcoin. I understand that this is probably not going to be everybody's cup of tea. He gave everybody the chance to exit if you weren't on board, because that's a man who's being transparent, who knows exactly the risks that he's taking. He said it time and time again when he's explained the story of MicroStrategy. We were a dying company. We were a zombie company. Either die a slow death and eventually become consumed by the Mag 7, or go all in on Bitcoin. And he chose the latter. Right. So this is foolish. This is foolish. Because of Q1 negative. Foolish. Q1? Okay. How about 2023, 2024? You look at those quarterly earnings reports?
Those are some good ones.
Some pretty damn good ones, man. But no. You focus on Q1. Clearly somebody who's not going to make it because they have a quarter by quarter time horizon.
Now, their take on this, though, guys. There is another take on this.
What's the
take?
That
is, look at who are the major players. So the take could be also, it's just, it's basically manipulation games in the big TradFi world. Maybe there's people that are trying to put mega shorts on MicroStrategy, and they're trying to put out stories that are going to potentially tank the price a little bit. I mean, these do happen quite a bit. That's another thing you get when it seems just so crazy and out there. It's a possibility.
Yeah, it is, but at the same time, I mean,
MicroStrategy.
When it comes to the lawsuit stuff like this, though, I think you guys really nailed it on the head there, though, which is just shameless cash grab. It's someone trying to make a quick buck, and it goes back to the security issue that Tracker talked about earlier, which is that once you're this kind of big player and you got all this giant company under you, a lot of Bitcoin, a lot of money, yeah, you're a mark, you're a target, you're something that people want to get a piece of. Even if it's a small piece, just because you're so massive, it's worth something. So that's why they're going for it. Tell you what, though, it's funny that you guys brought up this story, though, because I actually had
there are some big shorts. I'm just saying there are some big shorts that have been put on MicroStrategy recently. Jim Chanos, he's a big short person and he just shorted the hell out of MicroStrategy about 7 days ago. Just throwing it out.
Fair enough. It is funny, though, that you guys brought that up, because I actually had a screen share that I had pegged earlier. It was a Michael Saylor tweet. He says, the digital gold rush ends January 7th, 2035. Get your Bitcoin before there is no Bitcoin left for you.
Interesting. Why 2035? Like, why that date? It's a very specific date. Like, what's so magical about this date? He's got
I believe 2035 is when probably like 99.9% of all Bitcoin will have been mined. If I had to take a shot at
gotcha.
it. Yeah.
There you go. Yeah, that makes sense.
As having happened in 2024, 2035 is 9 years out. So that's like 2 halvings and a quarter out. So we're going to go from 3.25 to 1.6 something, and then like 0.8 Bitcoin per block reward. Okay. It's going to fall off quick.
Yeah.
Sure. Other than that, though, I did have one other Nostradamus of sorts that made a Bitcoin prediction. That's your boy, Jim Cramer. He says in 2030, 5 years, Bitcoin will be trading closer to $5,000 than $500,000.
Sure thing, Jim. Sure thing, buddy. Yeah, people have been saying that for 15 years. At a certain time, something turns from a fad to a trend. That's
Hear
okay,
me
man.
out. I'm going to look. I know we love beating up on Jim Cramer here. The inverse Cramer rule is largely undefeated, but there may be a shred of truth here, a shred of truth. So 1 year from now, what do you guys think the Bitcoin price is going to be?
A year from now?
Yes, a year from now.
I mean, Jay's already probably got napkin math.
It's not a technical answer. It's a fundamental answer. It's a fundamental analysis answer.
A year from now, Bitcoin will be magnitudes higher from the bear market low of 2022, which was $15,000.
Oh yeah,
but what kind of a market will we? What kind of market will we be in 1 year from now?
In a bear market, it'll be low. It will probably be lower than the price it is now, depending on what the top is. I can guarantee you one thing though. It's not going to go below. It's probably not going to go below its realized price.
That's fair. So if 1 year from now we're going to be in a bear market, theoretically, where will we be 5 years from now? Potentially another bear market.
Potentially another bear market.
If you want to give Jim Cramer the best possible read on this, is that he's saying that the bear market low, not for this next bear market, but for one then after that, will be less than $252,000 and $252,500. That is his bear market prediction for 2020 or for 2030. A little bit silly,
I guess if TradFi and the derivatives market can print enough money, or not print enough money, but create enough fake money out there to short it aggressively and try to force everybody into stable coins and try to kill Bitcoin, I guess it's a possibility.
Yeah. Well, no. The thing is, Jim Cramer thinks he's Jim Cramer.
But you got the rest of the governments going against that narrative, though. So.
No, Jay is correct here, which is that Jim Cramer thinks he's making a crazy prediction of Bitcoin going to zero. It's not going to be worth anything. Y'all are going to be fools.
No.
It's like I don't know, sir.
He thinks he's saying something smart, or I don't know, maybe he thinks he's being funny, but really the joke is on him. Because guess what, my friend? Even 5 years from now, during the next bear market, you know what's going to happen? Bitcoin will be trading closer to 5,000, but it's not going to be $5,001 Bitcoin. It's probably going to be at the minimum $150,000, $200,000 Bitcoin. So Jim Cramer is correct. 5 years from now, Bitcoin will be trading closer to 5,000 than it is to 500K, but it's going to be at around $150,000, $200,000 probably.
Wild stuff, man. Wild stuff.
Yeah, right, it's a hell of a range. It's a hell of a range.
Yeah. I think the sentiment, though, is that he's saying it's going to be worthless.
100% correct.
One of the few times he might be, but accidentally. So I don't know. Does it still count?
He's not correct in the way that he thinks he's correct.
Yeah. He's well. Here's the other thing. I mean, do you believe anything out of his mouth? I mean, that's the other thing. Like honestly, I don't. He has misled so many. You want to talk about a lawsuit on misleading investors, and he tries to get away with it because he's doing it for his charitable trust. This guy's misled more investors than he's definitely the king of that. He's the GOAT when it comes to misleading investors.
Unfortunately, I think there's a difference between misleading investors and just being wrong a lot. Yeah. And I think he's just wrong a lot.
Yeah, but when you're on a mainstream show and you're taking bets and you're telling people straight up what to buy, what not to buy, when to buy, and all this stuff, that's misleading investors.
Well, perhaps that's when he should get on that show, look directly in the camera, and say that nothing on this show is financial advice, nor should it be construed to be as such.
Yeah, man. I mean, he definitely fails on the fiduciary duty part of it. He's in the same boat with Vanguard. He's failed in the fiduciary duties because Bitcoin is the best performing asset of all time. So,
all right, gentlemen, we do have one final article that I want to cover before we close out the show tonight. Coming to us from Invez.com, Sonic, new ticker is S, dominates 2025 net flows with $1.3 billion following the Phantom rebranding. Sonic has outshone all other blockchains in net inflows so far this year, surpassing 1.3 bill. The milestone follows the network's rebrand from Phantom to Sonic back in January of this year. The Sonic token trades down at about 48 cents, which is down from the year-to-date peak of just a hair under $1. But the interesting thing is that they dominate in a lot of metrics. Not just have they been onboarding a lot through the inflows of 1.3 billion, they are one of the fastest networks out there. And I want to say they're top 5 when it comes to, it's at least top 10. I thought it was top 5 the last time Jay and I looked at the charts for TVL, stable coins, and that kind of stuff. But overall, the inflows, beating out Base, beating out Solana, big killer.
The biggest question I have for you, and it's nothing, it's more of a, are we going to treat this like when they rebranded Twitter to X, we're still going to call it Twitter? Are you still going to call it Phantom, or are you going to be stuck wanting to call it Sonic? Or do you guys find yourself still calling it Phantom?
I've actually gotten used to it.
I've gotten used to the Sonic moniker as well, but I will say there is a fun, I think it's very easy to look at the Phantom to Sonic upgrade and be like, oh, it's when they rebranded Twitter to X. No, when they rebranded Twitter to X, that was just new ownership. There was some fundamental stuff at the company, like just going lean on the staff. When Phantom upgraded to Sonic, that was a fundamental upgrade to the network itself. That upgrade was so massive, they could not use the old blockchain because it was the old structure was unsustainable for the new code. The new
did
code
they actually did they actually fork it, or did they actually, or was it just a simply they actually started a new network? That's why you have to bridge the Phantom over to Sonic.
Apologies, I'm back.
Yeah, I think we all froze there for a second.
Yeah, we did.
We're still alive though.
So yeah, that was just a question. So did they set up a brand new network, right? It's not on the Phantom network. It's a brand new Sonic network. So this is the way to transfer over, your tokens from Phantom over to Sonic, because it's an entirely new network. So in that case, yes, I agree. You're right. I was just making tongue in cheek on it.
No. It's a fair point. And I think it's actually one of the praises to saying about what they're doing. So it was a new network, completely transformed, rebranding, and they did a native Phantom to Sonic 1-to-1 token swap. So you didn't get forked, but there was a period there where you could bridge any assets you wanted over. And if you had native Phantom, they were willing to do a 1-for-1 token swap straight to Sonic. And for a while there, you could actually go back and forth if you wanted.
Yeah, they just stopped that back. You can't go back now. They just stopped that. I know that. Have they set a date when you actually have to have it switched over from Phantom to Sonic? They haven't set the date.
So the Phantom network is still going to be operable, but their main focus will be Sonic. So Phantom is going to kind of become a Phantom chain, if you will.
Yep, fair enough.
But Sonic is the main attention now. Sonic is the reason that they still have the Phantom network going is because when they did the Sonic upgrade, they also did a Phantom upgrade too. So Phantom is EVM compatible, or Ethereum virtual machine compatible. Sonic is not EVM compatible. It's its own like proprietary system effectively. The reason they did the upgrade to the Phantom network is they wanted to show that the EVM machine was still upgradable. So theoretically, if Ethereum wanted to upgrade the chain at some point, they could probably use that technology to some degree. But Sonic made such a degree of an upgrade that it was no longer compatible, and it is much, much faster. I want to say it's 5 times faster than the upgraded Phantom network.
But we've always said that Phantom developers were some of the best in the entire business. They always seem to have a very crisp network. They had not all their UIs were great. I mean, different teams had different stuff. But when it came to their yielding tools and all, they were leaps ahead of everybody else as far as the LP farms, the yielding. Like a lot of L2s now took a lot of notes from what they did. I mean, they really were setting the bar. So they had some of the best developers in the game. So it's just proof that it's still moving over.
For sure. In my opinion, Sonic has had a really good 1-2 punch. The first one was that they are very technically adept, and they've been that way for a while now. They were they launched during the last cycle, and they had a good run there. And even when they launched, their technology was still outperforming Ethereum virtual machines by like 8-fold. It was wild.
Okay.
And now they've gone even further. The second prong, though, is I think their PR team or their marketing department. I think they have a good marketing team, a good marketing department, and it also stems from Andre, who's the founder. I think he understands that. They've done a very good job.
Mm-hmm. Yeah, Andre's been a monster. Yeah, he's a beast. Weren't they? Didn't he just tell somebody to go kick rocks as far as like trying to sell or something like that?
So that story was from, apparently there was a break between the Sonic Foundation and Wintermute. Wintermute is one of the largest market makers in all of crypto. And the story on paper is that that was an amicable divorce. But Wintermute has started dumping millions and millions and millions of their S token holdings. They haven't dumped everything, but they have dumped a sizable amount. Now, the story is that that was just them trying to, it has something to do with a debt, like we paid a debt. And then representatives from the Sonic Foundation said that that was amicable, right? There's no hard feelings, But I think the speculation in crypto Twitter, and I actually like the speculation, is that Andre knows the shenanigans that Wintermute gets involved in. And Andre was like, sorry, go kick rocks. I'm not going to have any of that over here on the Sonic Foundation and on RL1. I like that story because I do not like the shenanigans that Wintermute gets involved in. The stuff that they do on Solana, for example, I don't like that. The stuff that they do on Binance, I don't like that. So that's the story.
Okay.
On paper, it was an amicable divorce. The speculation is Andre told them to go kick rocks.
Yeah. So Andre's always been the great. I mean, I truly. I mean, some will argue, is he the ultimate, the leader of everything? To me, he's their community leader. He is the person who sets the tone. He sets it all, and then the developers makes fantastic products. I own Sonic. I own Phantom, and then Sonic as well. I look to definitely not been. I've been holding my bags. I like to put money on good, solid technology teams that seem to know what they're doing, that have had a good track record, especially in this crypto world. They're not all created equal, but not by a long shot. There's a lot of garbage in the top 100 too. Well, just because you're in the top 100 market cap, or hell, even the top 20, does not mean you're a good token product. Sorry. So I could see Sonic. I mean, you can see Sonic make a pretty good run if we can. I mean, ultimately it comes down to an alt season, but if we did, it would definitely be one of the products that most people would probably be getting behind aggressively and should do very well. But once again, we need an alt season to support it.
Yep.
I don't think you even have to get that like too crazy into like doing 4-year cycle moon math for Sonic, or for Sonic to do well, especially when you look at the old Phantom data. I think that Phantom, right before they even had the Switch, topped out I want to say in December around like a $1.50. So it's retraced down to about like 40 cents. I think it had a hair below that, but it's also been fluctuating pretty decently. Had a smaller run up to 90 cents back in February, I want to say. So it's like, even on local timeframes, there's still good access to happen here. And granted, it's an altcoin, so it's going to be volatile. But at the same time, though, this is a top 100 token, good technology, good founders, a lot of good integration with other projects on their chain, a lot of good exchanges, a bunch of people trying to launch meme coins and whatnot. I think that the tech, it's just, the fundamentals are just good. I look at that and I'm just like, this is solid. This is solid to me.
Here's the travesty that TradFi has just still no clue what the hell's even going on here. And I'll say it aggressively like that, because the fact that you have great products out here, yet there's nothing really supporting them, in the sense that they haven't really been exposed very much to the mainstream TradFi world. If you look at which ETFs are out there that are supporting which cryptos, of course you have Bitcoin, you have Ethereum, the only two spot ETFs out there. But look what you have out there. You got freaking Horizon. You have Bitcoin Cash. You have Zcash, you have Stellar, Litecoin. I mean, you do have Solana out there, but there's little nothing. It's almost like anything that's getting behind any of this is it's just chasing market cap right now, and that's all they seem to care about. They're not even looking at the fundamentals of these coins. Where I'm going with this is there are some true diamonds in the rough, and Sonic certainly is one of them. I mean, nothing's guaranteed by any means, and I'm not saying it's going to do a 20x or anything. What I'm saying though is, if you want to be behind a good product, they make good products. They have a great track record and they have a solid team. That's what I'm saying. I'd rather put my money behind that. And if you're getting into a foundation that's going to be technical, it's all technical. I want to get behind a good technology. I certainly don't care about, and if they're going to get into marketing, that's great, because I don't think their marketing was that their marketing wasn't very solid. And it seems like they've kind of almost taken this opportunity to rebrand themselves, not just do that, but also start playing with the big boys and start attracting larger players. And that might hopefully will attract some of these bigger TradFi investors, because once you look under the hood to see these coins, you'll find real closely, even the top 50, they're not all created equal, not by a long shot.
Mm-hmm.
Oh, for sure. I think what you're talking about there is honestly probably the core of what a lot of us are looking for in this crypto space, especially as we move further into the 4-year cycles, which is that there's only going to be more and more projects out there. So how do you build a strategy? I think that largely we've all kind of arrived at a similar situation, which is that we use the larger, more stable players to create a bit of a backbone for a portfolio. Then you look at the next thing, which is like the rest of the L1s that are challenging for those blue chip spots in the next cycle or trying to prove themselves this cycle. So that's me stuff like Cardano, Solana, and all the other associations there. And then after that, what we look for is what you just described, which is projects with good value and good fundamentals. That, granted, they're not the biggest in the world, but that's kind of the point, which is that we're looking for those diamonds in the rough that have good fundamentals and good, like, just everything that they bring to the market is good. They have a good product market fit. The team is good. The tech is good. There's good community. There's good marketing. It's a good chart. There's no giant security risks. Exactly. All that stuff. If you can, when you find those projects, I think that those are the ones that really do start to rise towards the top. And you see it happen. I mean, like Sonic is, I just looked at it. It's like 73 right now for the market cap
65.
size.
It's 65 on
65?
Paprika. I
was
like
on
Paprika.
Wait, 65 mil?
No,
number 65.
Yeah,
oh, okay. I was like, there's no way it's 65 million in market cap. I'd be loaded up right now, bro.
Yeah. The point is, though, that
it's
even this project that we're talking very highly about, it's number 65 on your chart. It was 74 for me. At the same time, though, if you go ask even some really entrenched crypto folks, there's a 50-50 shot they will never have heard of this before.
Yep.
Which is crazy to me, because Phantom, I mean, here's the thing. If you've done anything in DeFi and you don't know about Phantom, I'm like, okay, what the heck were you looking at? Like, where were you even looking at?
You're probably new. You're probably new or fake DeFi.
That's entirely possible. Or they're just trying to chase some really high leverage stuff, like just ignoring mid cap stuff and going exactly for like blue chip L1s, meme coins.
I mean, honestly, I'm looking at the top market cap, and I'm going up the list from Phantom, and nothing has jumped out there really. I mean, Pepe is the next one. That's just a meme coin, just because of momentum. You don't even get up to anything that Shiba, that once again it's a meme coin, but it's got legs for that. I'd have to get maybe Avalanche at 17 on number 17, but that's got a $9.3 billion market cap. I mean, Avalanche has been putting out good sub stuff, and they do more stuff in the GameFi world and stuff like that. But I would put Sonic is a better product than Avalanche. Wouldn't even think about that. I don't even have to think about that.
I think that one might be up for debate, but I would say
Sui's got more legs probably, because it's got more entrenching at almost $13 billion market cap. But yeah, I'm sorry. I think Sonic is definitely that perfect spot where it has a lot of room it could run, and it still would be fairly cheap. And so it's got more room to the upside than those other ones that I just named, because everybody knows them. Not many people know about Sonic, and it's right there on the cusp. I consider Sonic more of a mid cap. If you're going on TradFi, it's not large cap, it's a mid cap.
I guess in the idea of sincerity and honesty, as we close out the show and our section on Sonic here, what are some potential downsides to investing in something like Sonic? I think at a glance, the first one is that it is that mid to low cap, like we talked about, which means there's a decent chance it's going to do good returns. We're hoping for crazy returns, but there's also a probability that it just doesn't catch on. Something happens something happens and it just tanks. It's unfortunately that lower. It's a higher risk play, but we still believe that even though it is high risk, there's good reason to bet on it. So, do you guys have any other potential grains of salt to throw in there
as a downside?
Yeah, just trying to be honest about it.
Yeah,
no
downside. The downside is yes, no alt season. The downside is doesn't matter how great your tech is. It matters how many people know about you and how many people get to buy in. This is not isolated to crypto. There are millions of people with good ideas, millions of good products out there. probably an infinite number that we will never ever be exposed to because nobody cared. Right? Good technology is a fortunate byproduct of mad gains. People only care about price to go up. I wish it wasn't like that. I wish it wasn't like that. I don't care. Like, I love Bitcoin. I love the technology. You think I'd be buying Bitcoin if I didn't know that it was going to where we think it's going to go? No, right? I care about price go up, man.
True. Hey, the only caveat I'm going to give you to that comment, though, is I will say, I think good technology, especially when you can get it to a certain level, it actually helps your customer experience and will help you retain people on your blockchain. Like, think to yourself, how many times have I waited over half an hour to bridge assets somewhere else? How many times have I waited like almost an hour for Coinbase to send some crypto to an actual wallet that I have? Yeah, when I'm using Sonic on the network and using like different exchanges to do various things, even before I can get my next transaction ready, I'm getting confirmations, multiple confirmations. It's boom, lightning fast.
Yeah.
And I think that level of customer experience it's something that if you can get in crypto and you can get it right, it's really good. And I happen to think that this one is really good.
It is fantastic customer experience, but you have to have the customers.
It's true.
Here's what I'll say on that, Jay, and I'll counter what you said. And I get it. That has been the mentality, and this is why you have stuff like, silly dog with hat that has made a lot more money in X's. Yeah. Meme coins have dominated. I still think we're going into a more maturing industry. It's not been proven yet, but I think we're on the cusp where technology will start to get leveraged, and who's got the better technology is going to have the better partnerships with traditional technology companies that want to move quicker and get in bed with somebody who's already got really good technology, and you're going to see things start to get innovative. And if you're sitting right there at that, you're not too big, so you could easily be acquired. You could be partnered with somebody. There's a lot more opportunity there. So if you're checked all the boxes, like we said, there's a higher probability you might jump dramatically because of the technology. It's no different than when companies like, I'm just throwing things out that somebody would know. So Uber. Well, you couldn't do Uber before you had GPS. You couldn't do it before you had smartphones. You couldn't do it before you had a fast enough network, or before you could pay with your mobile apps and things like that. Once you had all these pieces, now you can start to do things. A company like Sonic that has all the checks in place, they could then partner up and be a solution for some of these companies that want to leverage Bitcoin or crypto payments and to really start to move. I mean, it's got to start somewhere. And these big companies, now that you've got this green light for this regulation, I still think you're going to see some pretty impressive partnerships coming out over the next few years. I think it's going to change the landscape.
That's just going to matter, because the more partnerships you have, the better the net you can cast. Right? Because those
mass marketing,
they're probably going to promote your product. So at the end of the day, it still comes down to marketing.
Agreed. Marketing is big, but to Tracker's point, I think you're hitting something right on the head there, which is that it is very possible to be it's possible to be ahead of your time. The reason that technology advances at the pace that it does is not because the technology itself has advanced, but because the surrounding support structure and the rest of the market around it has also gotten to the area where it's able to make those next leaps.
Yeah.
So when it comes to the crypto space, it is possible to be too ahead of your time. So I'm sure people could probably point back to like GameFi projects and like 2-3 cycles ago, but they probably just never caught on because the market just was not there for it, and people weren't there to support it.
Look at Mark Cuban, bro.
Oh, Mark Cuban for sure.
Was one of the first people to promote or to propose online sports streaming, and they looked at him like he was crazy. It was too early.
Yes, yeah. And then the people that proposed it at the right time, those are the ones that got rich off of it. So
I'll throw one out there for you guys. There's something that I've been exposed to. So Disney Infinity characters, right? Pretty cool. Yeah, Disney Infinity, put them on. To me, it was ahead of its time, and they didn't know how to market. They didn't know how to put that product to market. That's why it failed. But great idea. Something you could actually hold and you could put it on. If you think about it, that's an NFT. I mean, not on the blockchain as we know it, but that is ahead of its time. That was very interesting. You can put something on, boom, you own something. Now it appears in the game. You have it. It's an asset. You could trade it with other people, swap it, buy, and then you can customize your characters and do stuff. I mean, that essentially was what games could start to move down the path on. So to me, I looked at that as a very early adoption that just completely failed because I think it was just too early and they didn't have. I mean, you could go back to I could always go back to the .com bubble. My gosh, there was thousands of companies that were ready to go, but they didn't know what to do with it, and they all failed. And the ones that came out of the rebel, I mean, look at the battle between Facebook and MySpace. Facebook came out on top, MySpace dwindled away. They were both at the same time for the most part coming on. It's just one beat out the other one.
True. Very true. Alrighty, gentlemen, I think that'll do it for about this evening. We may have gone slightly over time, but hopefully we're providing some good education, entertainment, and value to the audience. So, by the way, everybody that's out there, shout out to you guys for hanging in there. By the way, Matt, appreciate all the comments. I know personally, he did ask a question, what do you think about HBAR? I know that HBAR is like a professional financial blockchain, but for me, it doesn't really make the headlines and it doesn't provide anything that I'm interested in. So I don't know much about it. If it works for you, hey, it works. It's good. Please make as much money as you possibly can on that. But as far as an opinion, don't got one. Sorry, boss.
It's been around for a while. It's gone down in market cap over the years. It's still hanging around. Like I said, I don't know enough about it to really give you any guidance on that whatsoever.
I know that there's a lot of speculation about Hedera partnering up with some Trump entity, World Liberty Financial, the Trump Foundation.
Okay.
One of those. So there is a lot of things in the rumor mill about Hedera. And if any of those things actually come to fruition, it's going to give them some tailwind. That's for sure.
Well, they've already got a pump. They already had a pretty massive pump that they got going into the end of the year, like with the rest of the markets and altcoins, but it got pretty close to not all-time highs, but got pretty darn close to some serious levels. It's pulled back, but it's still holding up at a very high level than where it was just in that. So probably the rumor mills is probably what's been pumping the price, like Jay's saying. That makes sense. So it's something to definitely keep an eye on.
True.
Don't have anything else outside of that.
Hey, fair enough. Look, we mentioned there's tons of crypto out there. Even the Sonic stuff, like people are not going to know about it, even if they're in franchise and kind of around and trying to keep up with it. So I'm not saying just because we don't know it, it's not good. But at the same time, though, best of luck with it. Probably will look more into that, I will say. Outside of that, though, folks, thanks so much for tuning in. It's time to ask the gentleman, what do we have going on and where can they find you? Mr. Agent J, what do you do every morning at approximately 7:45?
We have the market open streams over at the DGen Roundtable Telegram channel, where we go over the news in the market, the price movements. Mostly we go over Bitcoin and what has happened over the past 24 hours and the ramifications it might have for the rest of the day and the rest of the week. So that is every single morning or as much as time permits for my own personal schedule. 7:45 a.m. 7:45 to 8 a.m. We go about anywhere between 30 to 45 minutes. And then aside from that, man, I produce a lot of extra content over at our Walk the Block members page, walktheblockndf.com/memberships, which I'm sure Zenith will bring up once we do our sign offs here. Aside from that, catch us again here next Monday. I believe we have a Whiskey Wednesday show over at the DGen Roundtable. We have a book club on Friday, and then everything else in between, man. We stream almost every single damn day.
True. And like Jay just mentioned, if you're interested in getting more content from us, more access, and ask us any of the questions you want, please join the Telegram. It is a paid Telegram, but we are doing a bit of a special because we just launched it, and we appreciate all you guys showing up early for it. Y'all are studs, by the way, and the conversation in there has been fantastic. But yep, $25 a month gets you in there, and follow the instructions on the link. The website is walktheblockndf.com, and if you go to the WTB membership tab, that's where you can find the membership page. We'll get you in the Telegram, get you speed as quick as we can. Outside of that, though, Tracker.
But just to say, we also had notes on there. If you wanted to pay in crypto, we've got that option now. Just wanted to put that out there because some people want to keep their privacy, and that's totally, we can respect that. That's another reason why crypto's there. It's your right. So if you're interested, you can reach out to us. Directions are on that page, and we will work with you, and we'll give you an address that you can send your coins, and then we will get you set up and take it from there. But as far as where I'm at, here on Mondays when I'm on time. And then basically throughout the days, I try to jump in there with Jay as much as possible just to stay plugged in with what's going on and to share what I can. We're also in the DGen Roundtable Telegram chat with everybody, keeping up to date. A lot of activity today with a lot of information was flying around. And then we have our private chats for members only, which we dive into a little more in-depth analysis. Jay does a great job on the TA. We even do a generate a outcome of the summary of the video. So if you don't have time to watch the video, you can get a quick summary on price action points and entry points that we're looking at. There's good information in there. We're working on currently right now, we've told certain people that we are working on other things like putting together some crypto 101 videos that we're hoping to put out there to everybody pretty soon and help people answer those questions that a lot of newbies ask, which is totally okay. We always hear everybody's got to start somewhere. So we all been there. Nobody's perfect and nobody should be acting like they're higher than that. So we're trying to help as many people as we can. So you'll get that information and we're going to keep growing and building more products for everybody. So that's where we can find us, and we're not going anywhere.
Going anywhere anytime soon. We're going to be around for a long time, I bet. Outside of those folks, thank you so much for joining tonight. Again, my name is Zenith. You can find me on Instagram and X over at ZenithDI. And then outside of that, though, folks, it's a wild time out in the markets. Bitcoin's flirting with all-time highs again. And it seems like we might be getting a little bit of volatility. Lord knows the last 48 hours has been very up and down. But whether you're trying to navigate those stormy seas by yourself or with the team, we're glad that you stopped by here to hang out with us. So until we catch you guys next time, I hope that everyone out there continues to navigate digital finance and do it very well. All right. Good night, folks. Have a good one.